Good morning. Thank you. 안녕하세요. I am very pleased to be here, and I want to thank my colleagues at MetLife Foundation Korea, and I want to thank all of you who are here. I'm very excited to find that a topic such as financial health, which we're not all sure exactly what it is, has attracted such a large and impressive crowd. I am Evelyn Stark. I lead our global financial health portfolio at MetLife Foundation. I'm based in New York. I've been working in this field for almost 25 years. And this field has changed a lot in 25 years. Many of you may have heard of microcredit, which proved the idea that low-income people could use credit productively and improve the lives of their families. Over the years, however, there was a realization that low-income people were also interested in other forms of financial services, including savings options. That's when banks, cooperatives, credit unions joined the group to provide savings accounts that were safer, accounts that were out of the house, away from temptation, away from children, and away from husbands. This recognition that people needed more than credit led our field from microcredit to microfinance. And the products expanded as we better understood clients' needs. Clients needed more than savings, more than borrowing. They needed to send remittances abroad as family members migrated to send money home. They needed to make payments for their bills. They needed to, a small business needed to be able to send a payment to the city to get goods sent back to them, as opposed to leaving their shops in order to do the transaction in cash. We recognize a need for protection products like insurance, because low-income households are less resilient to shocks, things like accidents, theft, and fire, that cost both money to deal with and result in a loss of income. This led to another name change. Low and moderate income people needed financial inclusion of these people into the mainstream sector. Leading countries in this effort, you may know, have been Kenya, Bangladesh, India, Mexico, but generally speaking, upper income countries have not considered this in quite the same way. As more governments and agencies like the World Bank became involved, there was an interest in measurement. We wanted to count things. This is what governments and agencies like to do. But the easiest thing to count was actually just having a bank account or having a mobile wallet. These are easy to count, but as we've already heard, they're lacking in understanding of actually how they are impacting the outcomes for the low-income households. Is their household's resiliency being increased? Are there opportunities or other outcomes being improved? Today, we are in the midst of another name change. And it's a shift to a new term, but it's also the new emphasis on financial health. In the next few minutes, I'll share MetLife Foundation's perspective, which, unsurprisingly, will be somewhat similar to the two perspectives that we have heard so far. I look forward to learning from everybody in this room and discussing more how we are similar and also how our ideas are different. So over time, and working with our grant partners at MetLife Foundation, we created this spectrum. What's most important about this spectrum is really this line. This is about the key benefits to the client. So over on the left, we see basic financial inclusion. This is really providing access to bank accounts and knowledge about financial services. The primary benefit is access and knowledge. But access isn't enough, particularly not if the account is too expensive to operate or too far away, or if you don't have enough income to save. Knowledge is also fundamentally a good thing. I think we can agree with that. But understanding how to calculate compound interest, for example, is not particularly useful if you don't have enough money to save over the long term in order to benefit from compound interest. So we said, OK, this is part of the spectrum, but that's not where we want to stay. We looked here on financial capability. And these are programs that really work with low-income people to encourage them to use the services more and to build confidence. Again, confidence is a positive benefit, but not where we want it to be. When we talk to low to moderate income people, what we hear is that they aren't looking for unrealistic things like luxury apartments and fancy cars. What they want is stability. As Brenton said, it's not the sexiest topic, but they want to have a cushion, savings or insurance, so that they can cover the costs of taking a sick child to the doctor. And like all of us, that they have an eye for the future, and that they're able to have a safe place to live, a comfortable retirement, small businesses, all of the things that we want for stability. This is our definition. We've heard similar definitions from the Financial Health Network, from Dr. Choi, and the basics are resilience and sustainability. We heard from Kifa that they use another term. We've opted to use this term, financial health, but we're not insistent that everyone use the same term. What we would like to be more aligned on, however, is the same goal, that we have a shared outcome of where we want to see our consumers. So we also wanted to understand just how prevalent this challenge is around the globe. So far we've talked about Korea and we've talked about the US. So we did a research with Gallup, the global survey company, to conduct nationally representative surveys in 10 different countries. We have low-income countries on the left-hand side, higher-income countries on the right-hand side. Don't worry, you don't have to study this graph, but I will say the color gives it away. Yellow is the amount of insecurity, financial ill health in a country. And blue is financial health. Only one country has even 50% of its population financially healthy, and that's Japan. South Korea is about 39%, a little bit different from what Dr. Choi said, but of course these are different, slightly different surveys. Just like the US is pretty close to the financial health networks. The red diamond, however, is also very interesting. The red diamond is the sense of financial control, the subjective measure by which people feel like they have the ability to make change. And what we find here is the very optimistic Americans with 33% financial health, but 54% feeling of control. Japan, where we have 50% of security, but only 31% feel it. Here in Korea, our survey is a little bit different than Dr. Choi's, and it finds that people are pretty right on. Of course, what this doesn't tell us if it's the same people who are actually secure are the ones that feel confident. But fortunately, the data is available, and anybody who wants to download the data set is free to do so. Overall, what we found was that there is a difference between low-income economies and high-income economies, but that we do have a consistent financial health problem. So where do we go from here? What are the solutions? There are often people who think that there are surefire, easy answers. In my 25 years, I've found that there are a lot of answers. None of them have been easy, and none of them have worked. The problem of financial health continues. Credit did not create an army of entrepreneurs. Some people want jobs and paychecks. Savings accounts did not automatically make people financially healthy. Some countries like India, they actually gave their population accounts. The population did not use them. The accounts went dormant. They were inactive. People didn't have the funds to save in there for the long term, or they were inaccessible. The government used the accounts to disperse government benefits, which meant that people could go to the bank and get their benefits, and that increased usage, but the usage was once per month, and that was to withdraw all of the money in cash and go home. So the account only became a distribution point and not really a product that helped ensure financial health. I've also highlighted Malaysia over here. We have a lot of savings accounts here. We have very high mobile phone penetration, but it has the lowest household savings rate in Asia at 1.4%. So you'll see I've noted mobile penetration a few times because mobile phone ownership, particularly smartphones, raised the hopes of yet another easy answer. Digital financial services were going to create financial health. But this has not proven. So in the UK, we have a 95% banked population, 93% mobile phone population, but 33% of men and 53% of women have no retirement savings. 25% of the population there has less than 100 pounds in savings. That's about 125,000 Korean won. You've already heard that people in the US have accounts and smartphones, but nearly 40% of them do not have $400 that they could get readily. That's about 450,000 Korean won. I don't think this is much as a surprise to all of you, because South Korea has the distinction of being #1 in smartphone ownership and internet usage and access to simple bank accounts. But as we saw in the Gallup data, fewer than 50% of Korean households are financially healthy. So I included Kenya here because some of you may have heard that Kenya has been very successful in their financial inclusion efforts. They saw a huge leapfrogging over banks, without having to work on infrastructure building. They went straight to digital. And this really has had some very positive results, particularly in the ability of people to manage difficult moments. You could send a text message to your network on your phone, and each one of them could send you some small amount of money and help you solve your problem. But that 24-hour easy access also has a negative effect, because sports betting on soccer games, has also grown exponentially, as has high-interest consumer debt. I think we'll agree that those two things don't aid financial health. So I think we probably all know this, but technology is a tool and not a solution. The Gallup data identified some predictors of financial insecurity and found that none of the predictors for people with that insecurity were related to bank account ownership or use. It wasn't a lack of technology or smartphones. Instead, the predictors included age, as Brenton said, low levels of education, you can't get a good job. Marital status, or being single, was a predictor, living on one income. And the region of the country you lived in was a predictor. In most countries, that meant that if you lived in a rural area, you had low potential for being financially healthy because of the difficulty in getting jobs. In Korea, being urban was a predictor for financial insecurity, likely due to the high cost of living and housing. Most of these things point to the availability and the attainment of decent jobs, which is why we brought that into MetLife Foundation's strategy for financial health. So here we looked at design, digital, and work as our area of contribution to this field. Okay. So we do have proven results, and I'd like to talk about these. So let me start with our partners in Poland. We have financial health measurement tools being developed, much like Brenton discussed, in order to work with cooperative sector that is reaching most low-income people in Poland. In China, we have an astounding number of mobile wallets, over 700 million of them. We're working in China with organizations like the China Academy for Financial Inclusion, that's working with smallholders, and also working with people like the delivery men who are on bicycles, who are in need of financial services, including insurance. In Chile, in South America, we are working with an organization called Destácame, which is providing not only credit score information for people, but something that goes beyond the credit score. So people like to know where their credit score is, and when they do that, they get the score, but they don't have an idea of what they can do to improve it. So what Destácame has done is use the attraction of people looking on the site to also add financial information as how to improve their financial lives. In the United States, we are working with a partner called Savor Life. Savor Life has helped more than 100,000 people increase their open financial savings programs online. And they, along with others, have saved more than $5.6 billion in 2018. These are predominantly low-income people. This is not a small amount of money, obviously. They are also working with the financial clinic. The financial clinic does something that I heard a lot about here in Korea as well, which is face-to-face counseling for people who are trying to improve their jobs, improve their lives. And together, the two of those organizations are helping people increase their savings massively. In other words, we see a lot of opportunity on the horizon, and that we're hopeful that there's a lot of inclusion of people like you in the financial health work. The people that are brought here together today are going towards a shared goal that I think we all believe that financial health belongs to everyone. Thank you for your time. 감사합니다.